Hello, guys. Welcome back. Yeah. So, as we had talked earlier about uh, give, giving an eye to this um, gap here, and when we were talking, the market was here. It was 19th December. The market was here, and I told you there must be a completion for this gap here before now the market decides to go another direction. You see? Yeah. So the market, sorry, fill this gap here by closing it, creating a balanced price in the market, and it went down, up, another gap here, as you can see it here. So from here, market skipped to this area, consolidated, closing the gap with this candlestick, then now went down. Yeah, and so the market has been going on. Another one is here. Market went down here, consolidation with the respect to these weeks of this low here. There's no body of the candlestick that closed below that area here. Now the market consolidated, went up to this area here, closing the gap, went down, and now market is just still consolidating. Yeah, so yeah, I'm telling you things, those do work. I'm telling you things those no any professional trader will ever tell you, because these things are the hidden identities, or they are hidden. Because when you know you are here, they in the market. Uh, for instance, let's say, let me, for instance, let me show you. Let's assume you are trading in this market here, and you know this is a gap. Market trades up, bounces back. Then you know this gap must be filled. After this gap being filled, you know now the market has created a balanced uh, price in the market, and it gives you this market doesn't break this area with the body of the candlestick. Even the low of this area did not break the previous low here. So it gives you a candlestick with a big momentum of going of being a bull trader, of bullish momentum. Then to the next candlestick, you can enter the market and expect it to take the buy side liquidities. Here is where buy side liquidities lies, and here is where sell side liquidities lies, and the market is now playing here. Now, the goal was to create a balanced it was to create a balanced and uniform price in the market. So from here, market went up here to this high here, filling this area of liquidity void. You see here, liquidity void, price moved so fast, creating a very big area with a lot of gaps in it. This area has a lot of gaps in that you can't see them, like, but is a price is like uh price is not balanced, and that's why the market, after this filling this gap, it first need to deal with this initial, our previous activity. It has to finish that before now it proceeds to the other one here, which is left some days before. So after filling that, now market takes another direction. and you can know when this market here, now the next day the market skipped a little bit down, consolidated here, went up here, filling this area up again. The same the same way it happens here. Here trades lower, consolidates, does not fill here initially, trades lower again, uh, trades up, filling the gap here. And now after that, trades lower. You see another gap here? It is filled too by trading lower, taking this sell side liquidities here, trades upper to cover this range or to cover this candlestick for liquidity void, trades lower but in a consolidation manner. Then here today, it skipped a little bit, then trades lower, consolidation trades higher to this area here, covering the zone. Now trades lower, then trades higher. That's how market operates when we are talking about gaps. And let me show you another example. You see this gap here, 20th December, this gap here. This gap here must be filled, this one. And let's see if it worked. Yes, today, that's where market is. That's where now the market is. It has already filled it. Now, the market can retrace back before it proceeds lower, either to this order block or mitigation block before proceeding lower. Let's check into 30 minutes chart. You'll still see it here? Yes, it is. Here, it is filled. Now the market, we're anticipating for the market to go higher. And you know the reason why we have all this liquidity void here? You see big candlestick, big candlestick, big candlestick, trading lower. It's because of news which were released today. And let's check those news which were released today. So, uh-huh. So, yeah, so the reason for those candlestick is we have this continuing jobless claim. It was positive, 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 positive. Yeah, so we don't see any red here. We don't see any red here. So we only have neutral and positive. So we're anticipating the market, that is for USD. USD, if it's good, in we're anticipating if USD here is good, and here the pair is gold USD. So we're anticipating the market will trade lower because USD is not a base currency, it's a quote currency. Here, you see here, it goes opposite. When USD is negative and it is the quote currency here, not the base currency, not the first one, it's the last one here. So if the news were negative, it could be positive. Now the market could buy. But if it was um, positive, then the market will sell, will go down, will go lower. Yeah, so that's why you can see this one. One, two, three here, and still market is still having a momentum for going lower still. But it must retrace back to give us a discount for entry to trade, because I didn't trade this because I'm not fan of trading news, because when there's news I try my when we have news I try my best not to trade. because being a intraday trader does not mean you trade every day. Yeah, so you better be wise knowing when to trade and when not to trade. Okay, you see the market, and the main thing for this was to cover this imbalanced area here, as you can see. So this was the main uh, thing. Yeah, so market might retrace upper. Though today I'm not in the market, I'm not going to trade. So I'll be watching. I'll be watching the market. Yeah. Unless now the market covers this area of liquidity uh, void. Here we have a liquidity void, and then we have a fair value gap here. This gap is called fair value gap. It means that there has not been even distribution of the price, and the price has been on one sided for quite a while. So the market has to go higher to create a balanced price in the market. Yeah, so let's see if it reaches this area before uh, closing to this line I put there, then I will be short. I'll go short. Yeah, but for a short term. Yeah, because I can't force the market to go, or I can't force to fit in the market if it's not aligned to my analysis. So I only take the trades which go according to my analysis. And if it's not in my analysis, I can't force it, because that's how I will blow my account. And I don't want that to happen, because I've blown many accounts so far, and I had to learn that. That was the year 2018 is when I blew my last account. And ever since I've been knowing what to do in the market, and my journey has been smooth, because the biggest enemy is yourself, and knowing when to enter the market is more important. Also knowing when not to enter into the market. Like now I know I can't chase the market, I can't enter the market here until it comes back to this area. Based on my analysis, then I will trade lower. I will trade when it aligns with my strategy. Yeah, because based on my strategy, you can look. Let's give this a look. You see this gap here? Yeah, must be filled. Yeah, and this candlestick, if it could have traded higher to this level, then I would immediately, at this area you see here, I would immediately go short at that level. But it has not traded in my based on my strategy. Yeah, it's still going in my area, or it's going in my direction that I had predicted the market to go, but it has not aligned to my entry techniques. It has not aligned to my entry strategy for being for going short. Yeah, so let's keep watching. Let's keep watching. But I don't think if this will be possible for this market to shoot before it passes this area to this area, to cover this area. And if it closes after maybe somewhere here, after this line, now I'm not going to take that trade. Simple as that. This gap here is the only gap that I can trade. It's the only gap that I do trade. So I won't um I won't force trades those are not working in my favor. Yeah, and that is one of the biggest mistake most traders do. Never chase a trade. If it leaves you, let it go. There are many trades which unfold every day. And um, one of my mentors said that no fear of missing setups or trades because they form daily for the institutional mindset traders. Yeah, and that's the truth. So when you lack or when you the trade does not respect your analysis, then you better not force it because that's the easiest way of going home too early. And I don't want that to work that way for me. Yeah, so that is it for today. And guys, thank you so much for supporting me and my channel by subscribing as we continue learning together. Because yeah, I have now this I'll be turning 6 years of experience of trading, and the journey has been so tough for me, and I had to learn that uh, because for the last 2 years now, I'm making profits. I'm making profits consistently, and and everything is working well. So never give up because I'm I'm not the type of person who will tell you that I'm making billions of money, I'm making $1 billion in a week, I'm making this type of money. No. But the best thing is that I'm paying my bills using this forex trading. I'm able to cater to pay for rentals. I'm able to pay for many stuffs. So yeah, so and the best thing is that I have time. So when you say we have financial freedom, it doesn't mean that we only have money. We have money, time, and peace. Those are three things very important. You have to consider having money, peace, and then time. Because you can have money and you have no time, can't enjoy it. And you can have money and time, but no peace, still you can't enjoy it. So financial freedom is about those three things. That's now is according to me now. Yeah, so guys, thank you so much for subscribing to my YouTube channel, and may God bless you. I'll be dropping another episode soon as possible. So, guys, see you later. Bye bye.